You're listening to the Market Update with MoneyWeb, brought to you by the Right Choice Investment from Discovery Invest. Nyembeza-Heita, did I say it better this time?
Oh, much better.
Chief Executive,
Excellent.
ArcelorMittal. I've been practicing, in the studio with us on a day when you're producing record financial results. The share price is down considerably, ArcelorMittal share price, but you are warning that you're going to be cutting production quite significant into the future. So it's almost three parts to the story. Start off with the most recent quarter, the September quarter. Is this likely to be the high water mark for the steel producer?
Good evening, Alec and the listeners. It certainly appears to be the peak. It showed the reflection of all of the price increases in the steel price from the beginning of the year, which, as everybody now knows, has been considerable. But it also reflected all of the raw material price increases as well. So that did become, in our view, the peak of that particular cycle. What's happened subsequently is that there's been a very, very sharp fall, which happened quite suddenly. And I think that's been the real test of this particular period. In September, you're going full tilt ahead. Everything looks wonderful. By October, you're exactly looking at the opposite end of the scale.
In just 1 month?
In just 1 month. And it all happened around the financial crisis, when the whole world woke up and said, but hang on, this is not only a financial crisis, it's got severe implications for the wider economy. And the steel market, or the steel sector, was one of the first that took that direct hit. We're very close to economic activity, so it's not surprising after the fact that we were. So we saw that happen just overnight.
Internationally, your parent today, ArcelorMittal, globally, announced that it's going to double the cut. It was already going to reduce production, but now it's doubling that figure. The share price really was hard hit, down 18%. From your side, the announcement today that you're going to be cutting production 30%, was that anticipated by the market? Has that been anticipated by analysts?
I actually don't think so. Certainly, the discussions that we've had today seem to indicate that although there was an expectation that there's going to be a production cut, that perhaps when we announced a cut in excess of 30%, that surprised people and our watchers in particular. But what people were not, I think that was informed by the fact that there is strength still in the South African economy. Although we're seeing a decline in our rate of growth here, it's not quite as bad as some of the developed markets, for example. But what they were not factoring in is that we have parts of our business that are export-facing, and the export market has disappeared. And so in our minds, it's not so much that there isn't a latent demand, because I believe there is. If you look at sub-Saharan Africa, those economies are still growing, and they're still growing at a fairly fast clip compared to ours, for example. The impact is as a result of the credit crunch. If people cannot get access to credit, they cannot transact in the steel market, given the sums of money involved.
Have you had any problems? We've heard of ships that are being about to offload products in harbours, and the letters of credit coming from certain banks internationally have not been accepted, and the ships have been sent back. Being such a big exporter, have you had any of those problems?
Well, I couldn't possibly comment very directly on that, because if you recall, ArcelorMittal has a joint venture with Max Steel, and all of our exports out of South Africa are handled by that entity. I would expect that if there has been a widespread problem with the letters of credit, that they would not be unaffected by it.
But when you say that the markets disappeared, the export markets disappeared, that's very quick, a very rapid turnaround. Which parts of the world have cut off?
Well, we have primarily been focusing our marketing activity on sub-Saharan Africa. At the end of the half year, and indeed at the end of this quarter, we announced 88% of our output into the domestic market and 12% into the export market. In that 12%, you would find that almost 3/4 of it would have gone into sub-Saharan Africa. Over time, we've just not been selling as much into Asia.
But clearly you're also worried about the South African market, if you're cutting production 30%, because that will be eating into domestic demand.
You know, we all look at the infrastructure program. It's big, it's quite widespread. There's ports, there's roads, there's power stations, but it feeds a lot of companies, firstly. Secondly, the evolution of those projects take time. So although we have seen and we were hoping that the decline in the consumer sector will be taken up, the slack will be taken up by the infrastructure programs, that's not a handover that is smooth. So there isn't an equilibrium between the two. I think in time you will see the infrastructure side pick up sufficiently to compensate for the slowdown in the consumer sector, but it hasn't been the case.
Are you seeing any cancellations? I say this because we're hearing slowly but surely that they're coming through. Anglo Platinum has postponed, BHP Billiton has postponed some of their projects, and Lonmin, of course, has done as well. They're doing nothing else above the ground, only underground stuff. A lot of this is steel related. Are you picking up any intelligence on that side?
Well, we're certainly going to be starting to see that coming through in the demand picture. But what happened also that we need to just bear in mind in the steel market, and not just in South Africa, but I think globally, it just was pronounced here, is if you recall in the first half, we had relines in Saldanha and in Newcastle. We came out of those relines in July with very low stock levels in the market generally. July, August, people began to stock up, and in fact hit levels of stocking that were widely in excess of a historical average number. The group reported a similar thing, that they have stockists in Dubai sitting with 5-6 months of stock, which is just unheard of. So as some of this decline in demand is a destocking in the industry, so some of that demand, so because we are a little bit divorced from the end user of the steel product, we will not immediately see this kind of pullback on projects. It will have a lag effect on us seeing it in our books.
From a global perspective, your parent cutting back again. Is the international market looking pretty grim?
Well, look, if you look at the CIS countries, within which segment we fall as South Africa, they're also exporting, disappeared. Overnight, they just woke up one day and they had no order book. So a very, very similar picture. But when you go into mills that feed into the domestic market, such as Brazil, for example, there the picture is more mixed. There is a certain element of strength underpinning the domestic market that is helping the companies through.
It's interesting looking ahead. Things aren't looking that rosy yet. This has been a fantastic quarter, the best quarter that you've ever had in the 3 months to September. The share price, though, is down from over 250 Rand to around the 90 Rand level at the moment, which I guess is telling you that the market's already anticipating a lot of the bad news. All of it?
I would love to know. I would think so. I'm not sure that anybody in the current volatility can look beyond 1 quarter, 2 quarters maybe. And from where we sit, we can't call a bottom. We actually cannot come and very realistically tell anyone that we think we've hit the rock bottom in the steel market. I think that people who watch us and our analysts may be in the same boat, but given what we know about cycles and where we expect the credit crunch to be within 6 months' time, perhaps the worst of the news is in the share price. But I'm speculating.
Tough times for ArcelorMittal, for steel producers and the infrastructure generally. In Nyembeza-Heita, Chief Executive.